Welcome to the Transparent FX Academy. If you're new to the channel, I'm Nick and I've been a top hodler on TradingView for many years, as well as being one of the only traders with a fully verified MyFXBook third-party track record. So if you want to elevate your trading, you're definitely in the right place. So subscribe to the channel, and without further ado, let's jump straight into it. So take a second, pause the video, read the disclaimer, and I will see you on the charts. In this video, I'll speak about BTCUSD. As usual, to keep the video as educational as possible, first I'll give you the technical aspect, then I'll move to the commitment of traders analysis to see what institutions in the market are doing and how they are moving and shifting their orders. Then I'll move to the on-chain data. We will be looking at some important data like the exchange reserves, and then I'll move to the liquidation heat maps to see where price is going to be attracted to for the highest levels of liquidations. And then I'll put together all these different types of analysis. So this is definitely a video you do not want to miss. Now, first of all, let's start from the monthly time frame from a technical standpoint. Well, what we can notice is that clearly we still are in an uptrend. The market has been creating a series of monthly higher highs and higher lows. The market so far has been following through with every impulse correction and impulse pattern to the upside. And at the moment, we have the possibility of creating yet another one of these patterns, because what we're seeing here is the retest of the previous high. The previous high was acting as previous monthly resistance. Now that previous resistance, from which all the previous rejection to the downside was created, is now acting as support here. Therefore, there is a good probability of seeing a potential rejection to the upside away from this level for the market to complete this monthly impulse correction and impulse pattern to the upside. We can also notice that the previous level at which we had such retest was this one here. This was the previous high, acting as previous resistance. The market broke it to the upside, retested it here as support, and so far it has respected it as support and rejected it to the upside. So at the moment, we have the possibility of completing yet another of these impulse correction and impulse patterns to the upside, rejecting this level. Dropping down on the weekly time frame, we can notice that this level is actually a quite important one. It has been acting as previous resistance in multiple occasions here on the weekly. It is much easier to identify every time that the market respected this level. We can see that after the market broke it to the upside, it always so far respected the level as support, starting from here, again here, and now with the last test which just happened. So at the moment, this level is still acting as support and still respected by the market as support, with good probabilities of a potential rejection to the upside away from this level. Dropping down on the daily time frame, what do we see? Now, here in the daily, this is where things start getting quite interesting, because what we can notice is that we're having the possibility here of an inversion. The market seems to be shifting from the creation of lower lows and lower highs to the creation of higher highs and higher lows. We went, in fact, from the first lower high, lower low, another lower high. The market failed in creating a new lower low and rejected to the upside, creating a new higher high. Now, usually when you see such a pattern, so the market fails going lower, inverts, usually what happens is that you see the correction and then the complete inversion. So the market shifts from the creation of lower lows and lower highs to higher highs and higher lows. So completing essentially and effectively an inversion of trend from a bearish trend to a bullish trend. What we can also notice is that we have an impulse and correction. If you want to measure the correction after an impulse, you have to take your Fibonacci from the low to the high of the impulse leg, which shows us how we have the 0.32 50% and 0.618 Fibonacci retracements, all lining up exactly this area. And if we extend the level to the left, we can see that is actually also the previous support turned resistance here, which is now again support here. Therefore, there is confluence of support inside of this area, with the possibility of seeing more institutional buying pushing the price higher. Just a quick interruption. Let me know in the comments below if you have any new pairs or topics that you would like me to cover, in the next videos, because I'm always open to suggestions. If we move to the commitment of traders analysis to see what institutions in the market are doing, what we can notice is that net positions have just shifted positive. Now, obviously, we are missing the last data because the US government is currently still in a shutdown. So the very last reports are currently still missing. But what we can notice is that net positions have been increased quite a bit. We went from a negative net positioning, meaning that we had more shorts than longs on the institutional side of the market, 26K shorts compared to only 24K longs, all the way up now to having a positive net positioning. So 23K longs, 23.1 and 23K shorts. So essentially, we are starting to increase and shift from having more shorts than longs to now having more longs than shorts from an institutional perspective. Now, since we're missing the very last few reports because of the US government shutdown, there is good probability that this trend has continued, because usually these changes in institutional positioning in the market take some time. So if the trend was of an increase of net positions, there is good probability that the new reports will see this trend continue and will show us that institutions have continued adding longs, therefore making BTCUSD stronger. If we move to the on-chain data, we can see here the exchange reserves. This is the blue line or purple line, which we see right here. This has been dropping massively as the price has been moving higher. This means that as the price is appreciating, instead of having new sellers, we're seeing even more buyers buying Bitcoin and moving it away from exchanges, therefore making the supply more liquid and increasing the probabilities of seeing potential bullish price action. If we move to the liquidity heat map, we can see that around the previous high, the previous all-time high here at 126.5K, we are having a cumulative liquidation of around 2.5 billion around this level. We can see here, 2.5, even more. So if the price will actually reach again the all-time highs, we are seeing a huge liquidation event. A lot of people that have leveraged shorts will get liquidated off the market, and usually the market is attracted to these levels of high liquidation leverage, because what we can see, for example, here, this yellow line here, the market was indeed attracted to this level. We had a huge spike to the downside, triggering this huge liquidation. We can see here, if the market would have moved to the upside and hit this level, all these people would have gotten liquidated. And in fact, again, that is exactly what happened. So the market is attracted to the level that has the highest amount of liquidation. So there is good probability that we might see that push higher, hitting all-time highs once more. Moving back to the chart, in a situation like this, what would I expect? Well, as usual, and as my students know very well, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with all these other types of analysis, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to bullish market, I wouldn't be surprised to see a rejection higher away from this area for the market to complete this daily impulse correction and impulse pattern to the upside. That definitely wouldn't surprise me. Now, everything that you see me share here on YouTube is just the tip of the iceberg. In fact, if you want to learn more, I really suggest that you head over to my website, which you find linked in the description. Here, you have the possibility to gain access to the best mentorship program in the world. You can get all my courses ranging from the very basics of charting all the way to the more advanced topics. You also have the possibility to gain access to the trading station software with the Telegram notification integrations, one-on-one private mentoring directly with me, the COT data software, which is the software that you often see me use in my analysis. And you also have the possibility to gain access to the entertaining live trading show. So essentially a live stream of all my trades as they're happening live every day. So my entries, exits, how I manage the positions, all streamed live every single day. essentially in this Telegram channel, which is obviously private just for members. You also have the possibility to gain access to all my EAs. So essentially all my strategies, which you can then customize to your own preference. And here you see breakdowns of each and every one of my strategies, including a 10-year historical backtest of the strategy on high quality tick data. So essentially backtested on live charts. So basically, I would suggest that you go and check these ones out. And if you continue to scroll down past the testimonials, you will see that you have the possibility to join and gain automatically access with the email and password that you will create during the checkout process. So I really suggest to at least go and check it out. The link is in the description and I will see you in it. If you enjoyed the video, make sure that you drop a like and a comment. It really helps with the creation of new free analysis and education, and I will see you in my next video.